it's time to introduce Summa Silver, a Canadian and Frankfurt-listed exploration company. Summa Silver acquires, explores, develops, and evaluates deposits in North America. And if I've done my homework correctly, we will have Galen McNamara here.
Hi, thank you.
So 2 out of 2 there, excellent.
Great.
Well, yes. So you just go ahead and we'll take it from there.
Okay, thank you very much for the introduction, and thanks everyone for joining me for the talk today. I'm going to speak to you about Summa Silver, and we've got 2 high-grade silver assets in the United States that back in their day were Wild West past producers and really helped shape that part of the world in an important time of history, but haven't seen much or any modern exploration until we started working here over the last several years. So very briefly, of course, I'll be making forward-looking statements, and this is available on our website should anybody actually care to read it. It's there. So a brief overview of both of our projects. One project is in Tonopah, Nevada, and the other one is in southwestern New Mexico. Both have seen, again, a lot of historic past production, very prolific producers, but not much or any modern exploration before we came. We've drilled many holes on both of the projects and have had some very good success, both in these historic districts, but also on their extensions, which I'll get into and start pointing. I'll start pointing out in the next couple of slides. But I think just from a philosophical perspective, I'm a geologist, and that'll become obvious if it hasn't already in the rest of this talk. But when you go into some of these places with this past production from 100 years ago or more, and apply the modern focus and use some of the tools that we have at our disposal that they didn't have back then 100 years ago, you can often find that there's, to use a cliche, a lot of low-hanging fruit there. So we're at the point now where we don't have resources yet, but a lot of the drilling has been done at a spacing that would support that, and we're trying to wrap our arms around what could be remaining in both of these historic mining districts. I'll briefly introduce the team. Myself, Galen, I'm a geologist going back 15 or so years. Before founding this company in 2020, between 2014 and 2018, I was managing the drilling for NextGen Energy in Saskatchewan, and really got to see that drill out of that project, which was very interesting. But I mean, going back to the mid-2000s when I finished school, I've always really been an exploration person that's focused on precious metals, mostly in Canada and now in the US. Jordi Belfiore, our corporate development investor relations manager. If any of you have touched base with the company, there's a pretty good chance he's tried to cold call you. So he's my right-hand man here. Christopher Leslie, a senior geologist. He's one of the gentlemen that discovered the Blackwater gold deposit in British Columbia. So something like 7 million ounces in the proven and probable categories right now that's currently being developed. Chris York, formerly from Hecla, joined us almost 3 years ago now, excuse me, and managed a lot of Hecla's drilling there, worked at some of their mines and in exploration. But really, I think, long story short, we're generally a group of mid-career mining professionals and geologists that have had some good success on some of the things that we've worked on before, and now are looking for a lot more. The capital structure, we're working with about 104 million shares outstanding, 128 million fully diluted. So right now, I think we opened today at 45 cents, so that gives us a market cap of in the neighborhood of $45 million. About $2 million in working cap, actually a little bit less than that now. So in a good position here as the markets recover to not, to be able to be selective about when we want to get back to work. We spent more or less 4 years doing exploration, drilling almost nonstop between 2 projects. So at the beginning of this year, I made the decision to okay, we're going to conserve capital a little bit. We're going to protect the share structure. We're going to drill just several holes on one of our projects to big picture step out from where we already know there's mineralization. And I'll get into those results, and they were very good. But it looks like I think that was a good decision as we see precious metals really recovering here and really starting to look interesting just even in the last few days. Actually, before I move on, just to talk about who's on the shareholder registry. Apparently this is a 20-minute presentation, but we only planned for 10, so I'll spend a little more time on each of these slides because there's fewer of them. Shareholder registry for us, our largest shareholder is Eric Sprott. He owns about 19% of the company, has invested in every capital, every financing going back to 2020. It's great to have him on our books. Other big shareholders, myself and family members, probably an additional 4.5 million shares. And then from there, close associates, I could probably circle another 10 to 15 million shares pretty easily. So, quite tightly held. We're looking good in that there's only 104 million shares out. And what that means is that when silver and gold turn on, generally we respond pretty well. So it's common for us, if there's 2 weeks of good precious metals markets, as we've had these head fakes in the last couple of years, our stock might go from 40 cents to 60 cents in the space of 5 to 10 trading days. Okay, to switch gears and talk about the projects a little bit. The first one I'm going to discuss is the Mogollon Project. This is the one in southwestern New Mexico that I think compares very favorably to some of the famous Mexican districts that the Spanish have been mining going back 500 years. But I'll do my best in the next few slides to explain why that makes sense and to paint that picture. So this project was the largest historic silver producer in New Mexico, produced something like 16 million ounces of silver and 340,000 ounces of gold at grades of almost 800 grams per ton silver equivalent. So a large historic producer. I've got some cliches on here that you might see with other companies, like underexplored and unfinished business, and those are great, but let me just put those into perspective by explaining some of the history. So this was discovered in the 1880s by a sergeant in the U.S. Cavalry. He kept the discovery secret until he got out of the military a couple years later, and then went back with his brother, staked some claims, and started mining. That lasted a couple years, and this was still during the time when the American government and the Apache people were at war. Were more or less at war. Things were very bad. He ended up getting killed by Apaches. That shut things down for a little while, and killed by a very well-known a leader of that people named Victorio. If you ever get a chance to Google him, he was a very, very interesting and sounds like a very tough guy. So that shut things down for a couple years, but end of the day, between the 1880s and 1942, this project produced on and off high-grade silver as metal prices came and went and discoveries were made. It was only shut down in 1942 because that's when the U.S. went into World War II. So that's when all silver and gold mining in the country stopped by law, by executive order. Between then and the 1970s, people always ask me, okay, well, what happened between now and then? Why hasn't this been looked at? And there's two reasons I can think of. One, during the last, until maybe recently, certainly during the last 50 years, people in this part of the world have been looking for the open pitable type gold deposits, whether that's in neighboring Arizona or even New Mexico. The open pit porphyry copper deposits were very attractive. In Nevada, the Carlin-rich gold deposits that were open pits were also very attractive. But those things that surface, the big open pitable deposits that surface, are now becoming harder and harder for us to find. So there's been this refocus on these higher grade underground vein situations, with recent examples of successes being companies like Silvercrest, companies like Vizsla Silver. So that's kind of refocused people on these types of deposits. But also when you get into these areas, these old mining places, what I would call land fragmentation is often an issue, where one family might own this little mine and then another family might own that little mine through inheritances or whatever. So putting everything together, you have something that's actually meaningful and not just postage stamps here or there. It can be a very difficult process. But in the 1970s, a geologist that was very well known from Nevada named John Livermore did that. And he was the guy that found a lot of the original Carlin deposits, some of which were for Newmont, and then later on some of what he did was for himself. So he put this area back together. He really liked it in the 70s. And in the 70s and the 80s, did just a little bit of drilling. And tested some of the targets, and that drilling, a lot of it was done out of his own pocket. He really liked it. He had some success, and that's what we're following up on today. So we've put a footprint on about 2 kilometers of the first, what I would call the main vein. There's an additional 75 kilometers of vein and prospective structure on this project that's largely unexplored. I'm just switching here to look at some of our drill results highlighted. This is an underground side view, a long section along the Queen Vein over 2 kilometers from north to south. On the right side of this figure, this is where we've done most of our drilling. Those dots are where the holes would come through the page. Some of the highlights being in hole 5, 448 grams per ton silver equivalent over 31 meters on the one side of that old mine called the Consolidated Mine. On the other side of it, 445 grams per ton silver equivalent over 16 meters with a higher grade kicker of 640 grams per ton silver equivalent over 9.9 meters. And perhaps just to frame this a little bit more, whenever I say silver equivalent in this presentation, I'm just talking about silver and gold. I'm not including zinc or lead or anything like that. But really, so okay, we've got one zone around one of the old mines on the right side of that drilled out, quite well. But if you zoom out, You know, over that entire 2 kilometers, there's additional mines where we know there's high grades in them, hundreds of grams per ton to thousands of grams per ton, that aren't tested below them. So one of the things that we just thought, okay, well, let's take a shot here this past winter. Let's take a shot here and step out a kilometer and a half, you know, and see if we can test some of our ideas. So drilled only 3 holes, and 2 of them hit. Hole 20 there is 393 grams per ton over 7.4 meters. Hole 21, underneath one of the old mines called the Eberly mine, is 1,133 grams per ton over 1.6 meters in what looked like a very juicy vein. And when we first got this project, you know, we didn't have those 2 mines, the Eberly and the Deadwood, you know, weren't part of it, weren't part of the property package. So I subsequently, in the last couple of years, did 2 deals to acquire those, where we now have that entire 2 kilometers of targets. And this is really on this project where I think the critical mass should be as we continue to step out and continue to drill. But now looking at, you know, the entire project, I did this a little bit backwards, and then I'm showing you a map of the project in the last slide of the project. But this is the one that I think really helps put it into perspective, where the Queen vein, where those 2 kilometers are, I don't have a laser pointer, so I'm just going to walk and point it out. You know, was something like from here to here, those 2 kilometers. You know, that's what I showed you on the last slide. Well, again, there's an additional 75 kilometers of prospective vein and structure present on the project. And when we first got this, we didn't have any surface sample data. So one of the first things we did was that we flew a LiDAR survey. It's like a helicopter-based survey that will show you every little variation in topography. That'll show you a prospect pit or a trench that's, you know, this deep. And found, located maybe 300, 350 of them or something like that. And we went around and sampled every one. Very simple. And got some great results, you know, 4,000 grams per ton, 8,000 grams per ton in grab samples and things that are maybe a meter wide, something like that. But it's still just obvious over this, say, an area of 4 kilometers by 6 kilometers, that there's a lot of joy here left at surface. And really big picture, this is where I make that comparison, is this one of, like one of those great Mexican silver districts. You know, I think this is a slide that helps put that into perspective. Okay, so that's one project. The other project is called the Hughes Project. This is in central Nevada, halfway between Reno and Las Vegas in the highway. It's the eastern half of the historic Tonopah mining district and its extensions. And I see it's a little bit garbled there on the right, but I'll read those numbers in a second. But just to start, you know, district-wide, 175 million ounces of historic silver production and call it 1.9 million ounces of historic gold production at really high grades of over 1,200 grams per ton silver equivalent. So this place is actually one of the reasons that Nevada is called the Silver State, and it still says, welcome to Nevada, the Silver State, when you drive in there from anywhere else. It's because of this district and because, of course, the Comstock lode, which was also very large. We've done more work here. Instead of 22 holes, we've drilled 62. Highlights like 3,900 grams per ton over 2.8 meters, 536 grams per ton over 18 meters, and then 1,450 grams per ton over 3 meters in a new vein from the past summer. Well, that's way too many numbers for me to throw at everyone and expect you to understand anything. But really, the main takeaway is big picture. Over a trend of 6.2 kilometers, we've drilled multiple zones and are in the process of needing to wrap our arms around what's remaining here and what the potential could be. Just to zoomed into a map of where our targets are, with those polygons being our targets. Some results on the left. I just like to concentrate on the map on the right here. The 2 targets on the left, called Murray and Belmont, those are in the historic part of the district, where we've done some really extensive 3D modeling to see where the veins are, what have they mined versus what they haven't mined. I think we've got like 100 veins modeled or something like that. And that's been a nice little, gave us a shortcut to drilling holes and hitting, you know, right away. Then I would say that every hole we drill on those 2 targets incrementally adds ounces, which is great, but it's really only half the story. The other half of the story is that the targets towards the right side of that map are exploration flavored targets, where we're looking for an extension of the entire district and trying to ask the question, you know, where's that next 175 million ounces? So switching here to another long section, an underground side view, I hope that this puts that into perspective, where all of our holes here on the left, our pierce points there, that's where we've done most of our work. And what happened was the veins, they run west to east, so left to right on this. And what happened was they ran into this fault zone called the Halifax Fault here, and the old-time miners more or less lost the veins on the far side of that fault. But the main vein, called the Belmont vein, was at its strongest when it ran into that fault. And there's no reason to think that it's somewhere out, not to think that there's somewhere out there to the east and just needs to be found. So there was one little clue that in the 1980s, a company called Echo Bay drilled a vertical hole out where we call Ruby, east of that fault zone. But it's a vertical hole, and you're looking for veins that are probably near vertical. It's not really the best way to make discoveries if you can just picture that. But they did get a little sniff. They got something like 3 or 5 feet of 1,000 grams per ton. So for us, that was like, okay, well, great, let's go back there. We'll drill some angled holes across it. We'll just chip away at it over time as we drill the rest of the district. So far, we've drilled 6 holes testing that idea, and all of them have hit. And from here to here, from Ruby to Sapphire is something like 2.7 kilometers. So there can be a lot of ounces hiding in there, with the best hole being 3 meters of 1,450 grams per ton silver equivalent. So for us, there's 2 big questions here. If to the left of that fault, there's been 175 million ounces of historic production and 2 million ounces of gold, plus whatever we've drilled, plus whatever our neighbor BlackRock Silver has drilled, which is over 100 million ounces. Number one, how many ounces are left remaining to find east of the fault? And number 2, where did that main vein go, where it was 5 to 10 meters wide and 1,000 grams per ton? So I think that's really what our focus is going to be here coming up soon when we begin work again at this project. And then just last thing on this project, I like to compare what I'm working on to what some of the world-class things are of similar affinity, similar vein systems. So Tonopah, Nevada, the table on the top of that, produced those ounces over a trend of 4 kilometers and 175 million ounces. Well, compare that to the Guanajuatos or the Sandy Masses or the Pachucas of the world. Those Mexican examples, a much longer strike length, 18 kilometers, 7.5 kilometers, and of course, many more ounces produced. That just makes sense intuitively. Well, if I take the length of this white line, this white bar at 4 kilometers for Tonopah, and I add 1.5 kilometers onto that where we've hit well at Ruby, and an additional 2.7 kilometers onto that where we're starting to hit at what we call Sapphire in one hole, it fits in quite nicely with how big these districts can get when they really get to be truly world-class. So it was that realization for me in early 2020. I did this exact exercise and had this realization. And I went to Tonopah and I staked the claims that are east of the district where we're now starting to hit. So that's it, really. That's the Summa Silver pitch in 20 minutes. We've got 2 high-grade historic past producers that need a lot of exploration. We've had some great success so far, and I hope and think a lot more is coming. Thanks very much.
Well, thank you for that. Interesting. You mentioned here a huge project, and then you said we need to find out where the vein went, the silver vein. Could you give us a feel for a timeline? Would you know that within 6 months or 12? Or?
Absolutely, within 6 months. I think you know that within 10 holes of systematic drilling. Yeah. Fences of holes across that 2.7 kilometers to hone in to where the main structure is, and hopefully you hit it.
Yeah, and at least the market will know, and then if there isn't anything there, then you know, and then you can go back. Yeah. And just to explore or expose my ignorance here, a lot of these assets are historical assets, and then they didn't produce anymore. Was it just because the technology wasn't there, and now you can bring new technology to search, and then obviously we have new technology to develop? Is that the way to look at it?
That's a large part of it, and also, and the processing technology is important too. The labor costs are important too. But you look at them, and they really needed, just based on the metal price environment of the time, they really needed 1,000, 2,000 grams per ton to make a go of it. But right now, the grades in a lot of the other places are 300, 400, 500 grams per ton for an underground mine. So our parameters are different, and that changes the way you search for them.
And also, forgive me my ignorance there, but what's the debt situation? You don't really have any debt. No, we don't. We have no debt. No. So, and the reason why I'm asking that is that if we look at a situation where we will have a price fall, which is not unlikely when you have, what goes up might come down, and then it come up again. Sure. That means that you're pretty comfortable I take it that you will still be able to continue this because you don't really have any debt, and you can refinance that.
Yeah, absolutely. I think we have been and we want to be very selective about when we time financing. But we work in exploration, and that that's the business, right? So.
And also if you have a legendary like Eric Sprott, then it tells you something.
Yeah, I think and I hope so. I think and I hope so.
Okay, thank you very much.
Thank you.